All right, good evening, everybody. Tim Davis here again, coming to you guys with another market update. I wanted to try to do this early, just had a busy day today, but thought I would take time out to give another quick market update as we continue to monitor this overall movement in this bear market. Again, folks, if you do not understand how to read and trade these trend channels, um, you want to pay close attention and understand, you know what I'm saying, support resistance levels, because even at the big sell-off, we could see a little rally, but trust and believe that this bear market is not over. I think we are just in the beginning stages. Here is a daily chart of the Dow Jones E-minis. And for those who've been following me for a while, you know I've been tracking this channel for quite a bit, and it's working like a charm. And as you can see, we are just channeling right through this bear market channel like it only does work. You know, you have up days, up days or up weeks, and then you have this downward motion, creating lower highs and lower lows as we go through this bear market. So we are right now at the big sell-off today, back at the bottom of the channel, and we have the Fed speak coming up this week on Wednesday. So anything is possible. We could get a little rally, but ultimately, I think we are in the process of possibly having a much bigger downturn, folks. I think today was just a precursor of what we could see. You know what I'm saying? As we continue to go through this price action. And let's see. We look at the weekly chart of the Dow Jones E-minis. Here is how we look right now. Again, we are in this downward channel. Weekly chart, we're back at the bottom of the channel, so I would not be surprised if we did see some type of, you know, move higher. I don't think any move higher from this point on. I don't think they're going to be too extravagant. And again, all it needs is catalyst for a short-term move higher, then right back down to the bottom of the channel. I think we're going to start to see these move down, these down moves get more and more intense each time after a rally. So that's something to pay close attention to. Here's a monthly chart, and a monthly chart speaks for itself, folks. It spells volumes. I'm telling folks, pay attention to this monthly chart. Look at it, looks just like almost a falling knife. Look at the momentum indicator, TTM squeeze. It's constantly going down, 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 which means we are definitely losing steam as far as the momentum to the upside, and the bears are taking full control of this market. Here is full stochastics pointing straight down. Range percentage pointing straight down. And we have the RSI that's slowly but surely starting to follow right on down. So these next couple of months, folks, are going to be rough. So I think most of the folks who are navigating through this market are making money on the way down. So you need to learn how to make money on the way down, because I think that's where most of the money is being made as we speak right now. It's not many stocks that are given great opportunity on the upside. So you need to understand and learn how to trade this market to the downside, or else you can get caught in these bear traps within this bear market rally. I mean, within any bear market rallies. All right, take a look at the S&P E-minis. It's going to look the same. Here is a look at the S&P E-minis. And let's look at this daily chart. And look at the volume, folks, as we were selling off this today. Look at this volume. Selling volume is extremely high. So that means more than likely we're going to see more selling pressure, as folks are really trying to sell everything with this move down. We are temporarily in oversold territory. If you look at the if you look at the Rams percentage and the full stochastics, doesn't mean we can't go down even further. So that's just food for thought. We are currently hovering around that oversold territory, but any rallies, folks, I almost guarantee they're going to be sold off. So just be mindful of that. Here's our weekly chart. S&P minis again. Still got a little ways to go. If you look at the weekly chart before we even get to the bottom of the channel. So we could see more selling pressure tomorrow, folks. That's a big possible chance. Then Wednesday, we got to see how things play out. But the Fed has to do some drastic things in order to tame this inflation, as we saw what happened on Friday with the CPI numbers. It was another historical number, as folks last month was saying that we were, at peak inflation. Well, they found out the hard way on Friday that was not the case. We were not at peak inflation. So nobody, these analysts and politicians that are talking about we at peak inflation, don't believe the hype, folks. We could be heading to a recession for sure, if not already in a recession. So I think inflation is here. This high inflation will stay with us for a while, and I think it's here to stay, and we may even go higher. So with that said, the Fed, even though the Fed took 75 basis points off the table the last meeting, I think you would walk itself into a corner. The Fed may have to be aggressive. And this Wednesday, who knows what may happen? I think definitely the rates are going to be raised again. But the question is, will it be 50 basis points, 75 or 100? So we have to see what happens. Whatever move they make, I don't think markets eventually, are not going to be satisfied. So we may have a snapback rally because we hit oversold levels on Monday, and possibly may even see some more down pressure on Tuesday, possibly. Fed may induce a low rally, possibly. I just say possibly because nobody really knows this point. But what I do know is that we are in a downtrend. We're stuck in a downtrend. So no matter what type of rallies we get, as you can see, every time we get these big green candles on the weekly chart, they sell off. They sell right off. So the bear market downward trend is still intact, and things are getting more and more intense. Let's take a look at the Nasdaq E-minis futures. Again, here's a look at the moving averages. As you can see, price action back below the 20 per moving average again, and heading right back down towards the bottom of the channel. Temporarily in oversold territory on the shorter term, on the daily chart, and possibly a 4-hour chart too. Yep. So we're in deep oversold territory on the 4-hour chart. So would not be surprised to see some type of snapback rally before we get to Tuesday. If you're looking at the 4-hour chart, we are in deep oversold territory. So even throughout this night or tomorrow, we'll probably see some type of little rally to set up for set up for Wednesday. So if you look at the 4-hour chart again, you see, look at the RSI, deep oversold territory on the Nasdaq E-minis. Russell 2000 E-minis also deep oversold territory on the RSI. RSI showing at 19. Doesn't mean we can't go lower. This means that we're currently in oversold. We could get a little rally, a little bounce before heading lower. 4-hour chart on Dow Jones E-minis right back at a level of support. So again, we could see in the near term a little bounce here. Could get a little bounce here, but I think all bounces will be muted. If we get a snapback rally on tomorrow, on Tuesday, which is a huge possibility, I think that'd just be a setup to disappoint the bulls into the Fed speak on Wednesday. So that's something to pay close attention to. All right, let's take a look at our VIX. The VIX, I've been using it as as a leading indicator as to what we can expect. Now, look at the VIX 4-hour chart real quick. In overbought territory temporarily, and there's a gap up in the VIX in the 4-hour chart. So again, I'd be surprised to see a rally in the markets tomorrow, possibly to try to fill some of this gap. And then prices head right back higher for the VIX. I think if we do get some type of pullback in the VIX tomorrow, I think it's going to be a setup for what's going to happen on Wednesday. If for some reason we get a rally tomorrow in the regular markets and a pullback in the VIX, I think it'll be a setup for the VIX to push right through this 39 level, above this 40 level before the end of the week. Let's take a look at a daily chart of the VIX. A big gap up. So again, I would not be surprised to see some type of pullback in the VIX. They try to, make the bull bulls a little happy, temporarily, possibly. And, I think by the end of this week, we could very much well push right through this $39 or $40 level of the VIX. So that's something to pay close attention to. Look at the weekly chart, folks. It's just like it's just been setting up perfectly for a breakout. This VIX, folks, I'm telling you, it is leading indicator. Look how the VIX has been traveling. That's what I see. That's just what I believe we can possibly see soon. We'll pull back and then a breakout right above that $40 level. So the weekly chart it's been looking strong. This VIX is just ready to break out in a major way. So by the end of this week, folks, be very careful, be mindful, because we could see big movements in the VIX by the end of this week. So again, we had a big old downdraft today, huge downdraft in the market. So we could see some type of rally throughout the night, maybe into tomorrow, maybe throughout tomorrow. And if that's the case, then I can almost guarantee on Wednesday, it's going to upset these bulls if we do get a rally tomorrow. All right, so wanted to paint that picture again, folks. There is a lot of data that's pointing towards a recession, so keep that in mind, folks. Don't believe the hype what you hear. A lot of data is pointing towards a recession. All right, look at the XPXA 200R, which is the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. This thing continues to move lower. It continues to move lower, folks. So again, as I pointed out before, we were as high as 97% back in April of 2021. Look what we broke at today. Below 20, folks. We are at 16. So that means that only about 84% of S&P 500 companies, I'm sorry, only 16% of S&P 500 companies are above their 200-day moving average. 84% are below. So 84% of the S&P 500 is below its 200-day moving average. That is a strictly bearish move, bearish momentum. So the bears are in full control of this market. Again, my ultimate target, I think we're going to get to zero. So I still have that target in place. You see the arrow I got thrown down here, the trend line. I think we're going to hit that level eventually. And then we have to see what happens if we do hit that level. Here's what we look like on a monthly chart. As you can see, it looks like a falling knife. We have been in a straight downward slope since we left that 97% level back in 2021. And again, like I pointed out before, if we look at history, when we had a move such as this, we eventually come back down to meet the zero level. We did it here, that's 2021. And we did it here, 2009. So I think we are heading right back to the zero level like we did back in 2000, like we did back in 2020, COVID plunge, and like we did back in 2009. So the momentum indicator and the breadth of this market is showing us that we are stuck in this downward draft, and it doesn't like it's letting up anytime soon. Now, for those who watch, pay close attention to, I don't really normally do this, but we're going to take a look at this one. Because Bitcoin, folks, believe it or not, has also been a precursor to what we can expect in markets. And the Bitcoin finally broke well below that $25 level in a big way. To me, that's just another sign that be ready for stocks to really hit some movement to the downside in a big way. Look at that. Bitcoin is just crashing. It's cratering to the point where, as I think there was some platforms that halted folks from being able to withdraw draw their funds out of Bitcoin. So I think our markets is going to see the same fate. Unfortunately, I think our markets is about to see the same fate. All right, let's take a look at crude oil, because crude even took a little move lower, but guess what? It bounced right back. Look at this. Here is a daily chart of, 4-hour chart of crude. Look at that. It pretty much pulled back right along with stocks today, but nothing dramatic. Right back. This is a 4-hour chart, right back to the 50-day moving average. Look what it's doing. It's trying to turn right back up. Crude oil is just another sign of inflation on a rise, because crude oil is not taking the bait and falling with the market just yet. I think eventually it probably will, but it's just not taking the bait. It's having these small pullbacks right to the moving averages, and then starting to rally again. So we got to see if crude oil holds support levels at these moving averages on the 4-hour chart, and take a look at the daily chart. It's our daily chart. So daily chart shows price action just been holding right above the 20-day moving average. So in crude, we got price action just steady holding right above the 20-day. So we get these little pullbacks, but then just been holding up. And eventually, I think there's a real strong possibility if crude continue to stay above major moving averages, we're going to possibly see this breakout above 130. And that's where we really see gas prices start to take off. So that's that. And let's take a look at one more tool that I like to pay attention to. As a matter of fact, before I even do that, this is something I wanted to do while I am analyzing the markets along with you all. I want to take a look at, I want to put a fib tool on the S&P. I already have one on here. Okay. So I want to take a look at this fib tool to show you guys how price action is moving diagonally and horizontally. So as you can see, this diagonal move down with an overall price action. The fib tool can give you some areas also that you can look for some possible support resistance. If we blow right through or ignore the downward trending lower channel trend line. Here we have multiple gap downs in a row on S&P. Punch right through this 38.2% fib retracement. So we punch through that. The next level support would be right at this trend line. So we could go a little bit lower and then possibly still a rally. If we do get a little rally, this area here is going to act as a level of resistance. So I say right around that 38.2% fib level is going to act as a level of resistance. As you can see, we got close to it there. So this is going to be a level of resistance. If we continue to go down, we come back up, we can see stall right here. And then if we go even higher, if we get a higher rally out of S&P, we can look at these gaps as levels of resistance. Then if we pass one gap, the next one, you can use that as a level of resistance. That's a good way to read and analyze these markets as we travel through the rest of this week. All right, now let me do this and I'll be out of here. Let's take a look at the Wall Street Journal tool that I like to pay attention to, which tracks the highs and lows of the day. So this is pinned to the front of I have the link pinned to the front of my Twitter account. I have not looked at this yet today. It's my first time taking a look at this, but I want to glance at it and see what the breadth of the market is showing us here. And look at that. This is the first time I've seen this, folks. This lets you know that bears are really in control of this market. So highs and lows today created in the New York Stock Exchange. One new high. And look at that. 802 new lows created today, folks. That tells you that the bears really took control today in a major way. So I would not be surprised to see some type of snapback rally tomorrow at all. Almost no new highs created today in the New York Stock Exchange, folks. That is something that you cannot ignore. So if you're still trying to be a buy and hold investor in this market, you're going to get you're going to get demolished if you're waiting around to see when you going to see some type of profits within your buy and hold strategy. And I say that to say, of course, what I'm saying, if you want to build a nice long-term portfolio, it's good to try to build it when prices are lower. But what if they go much lower? And if I was to draw your attention back to the 2000 era and 2009, it took several years. And from 2000 era, it took about 13 years for those folks to even break even and get back to where prices fell from back in 2000. 13 years. So what if it takes 13 years, as you're buying now, as we're going down? What if it takes 13 years for you to see profits? So learn to, protect your portfolio, and also learn to play this market on the downside, so you can continue to see profits within your portfolio. So again, look at that. One new 52-week high for the week, 802 new lows. Bears in full control. Switch to the Nasdaq, 24 new highs for the day, and 1,155 new lows, folks. Bears in full control of this market. Just wanted to point that out. All right. Okay. So one last look at the Dow Jones futures. I don't expect a lot of strength out of this at all, folks. Even if we get a little rally, I don't expect much of anything. I think because there's so much selling pressure right now, any rally can be very, very short-lived. All right. All right, folks, I think I went over everything, pointed out everything you guys that's important for you guys to see. I'll try to do another video tomorrow sometime, probably after the close. And if not, definitely after the Fed speak on Wednesday. Till next time, folks, enjoy the rest of your day.